Well, I've probably been a little bit more on the pessimistic side for a while. And in the end, I think everyone would agree that a trade war is negative for everyone. And you could argue that it's more negative for China than it is for the U.S. But the fact is today, it's not negative for the U.S. in terms of, well, the popularity of Trump and his approval ratings. And until you get some negative impact on Trump's approval ratings, this trade war story goes on for a long time. And in my view, we're not going to see a change at least through the U.S. elections in November. So what I would expect this rhetoric to continue over the next couple of months.
Do you think from investors' perspective then, what's the strategy? Should you just sit back and stay calm until that election risk clears?
Well, I think that is exactly the strategy. Maybe now is not the time to take more risk. Emerging markets have become even more volatile than they have been in the past. But if you look globally, the growth story is fairly good. Central banks are keeping rates low for a long period of time. So in my mind, we still are in a very good global economic environment. Investors in the long run will benefit, but in the short run, I think you're going to see a lot of volatility.
Many investors out here in the Asia region are wondering how China will respond if we do get the White House making good on this latest tariff threat. A lot of this discussion has been around whether or not they'll look to their currency to devalue it to make their goods more competitive. But this, of course, has a lot of implications for not just China, but broader emerging market region here as well. I just want to play a soundbite of my discussion with Axel Weber, the UBS chairman that we had over the weekend on this very issue of the yuan. Take a listen to what he had to say.
I don't see that as a big risk because China over the years has clearly, and the new governor as well as the previous governor have iterated that China is interested in a stable currency. If you look at investments into China from foreign investors, those foreign investors would be a lot more cautious if they fear that the Chinese currency would depreciate in a strategic or in a tactical manner. So I don't think that is part of the policy. I talked to the president of the People Bank of China and Yi Gang, and it's very clear that there are unchanged policy preferences. A stable currency is in their interest. Yes, the currency has depreciated by about 7% over recent months since the summer, but that's part of the picture that you see in many emerging markets where there has been tensions and a sort of appreciation of the dollar relative to these currencies.
So there you have it, Steve. I was speaking to Axel Weber there, and he told me based on his conversations with the PBOC governor, he's pretty convinced that China will prioritize stability over just any measure to quote unquote win in this trade fight. Does that reassure you as an investor?
Well, look, I don't think China wants to win a trade war. They want to get through this situation and continue export-led growth because right now, although they would prefer a domestic-led economy, it's not strong enough at this point to support bringing people out of poverty, out of the agricultural sector into the urban workforce. So they're going to continue to need that export-led growth. In the end, the currency can weaken a little. And like what was just said, it's not really a Chinese yuan story. That's really an emerging market story. I look here at the Aussie dollar, the Kiwi dollar. Really, all Asian currencies have weakened a bit versus the U.S. dollar in the year-to-date period. But China needs to figure out a way to give an optical win to Trump to get this trade war over. But I think that's going to be a long process. It's not going to happen in the short run.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.